Hello everyone, welcome to the March 17th Tuesday edition of the Market Opening Bell, your 10-minute guide to the stock market. Mainland China's three-horse carriage data came in stronger than expected. The market is watching developments in the Middle East conflict and interest rate decisions from several central banks this week. Hong Kong stocks rose, led by technology and auto shares. The Hang Seng Index opened 29 points lower, fell as much as 147 points to an intraday low of 25,317, then reversed higher. It climbed as much as 391 points to 25,856 before closing up 368 points or 1.4% at 25,834. The X-share index rose 144 points or 1.7% to 8,816, while the Hang Seng Tech Index gained 133 points or 2.7% to 5,111. Total market turnover reached $264.4 billion. Southbound trading volume total $112 billion, while Southbound Funds recorded a net outflow of $1.25 billion after net inflow of $18.449 billion the previous trading day. Net purchases included Tencent for $2.287 billion, Alibaba for $706 million, BYD shares for $586 million, Geely Automobile for $442 million, Huahong Semiconductor for $387 million, Sino for $347 million, and Yangtze Optical Fiber and Cable for $165 million. Net sales were led by the Tracker Fund at $3.574 billion, Xiaomi for $844 million, and SMIC for $330 million. Statistics show that Southbound Funds have now net bought Sino for 4 consecutive days, totaling $3.384 billion. Senior officials from China and the United States are holding talks in Paris on trade and economic issues to prepare for the upcoming Xi-Trump summit. US President Trump said that if China does not help resolve the blockade of the Strait of Hormuz, the planned meeting with Chinese President Xi Jinping could be postponed. On the mainland, the three major A-share indexes closed mixed. The Shanghai Composite fell 10 points or nearly 0.3% to 4,084. The Shenzhen component rose 26 points or 0.2% to 14,307, while the Chinese index gained 46 points or 1.4% to 3,357. Turnover on the Shanghai and Shenzhen markets totaled 2.33 trillion yuan. The renminbi central parity rate was lowered by 50 pips to 6.9057 per US dollar. China's industrial production above designated size showed strong performance at the start of 2026, displaying a clear recovery trend. In January-February 2026, industrial value added grew 6.3% year-on-year in real terms, beating the market consensus of 5.3% and indicating that industrial activity accelerated after the Lunar New Year. Retail sales also show signs of warming. Total retail sales of consumer goods rose 2.8% year-on-year for January-February, exceeding the widely expected 2.5% and accelerating by 1.9 percentage points from December to 0.9% growth. Fixed asset investment reversed last year's decline and posted modest growth. Nationwide fixed asset investment increased 1.8% year-on-year for January-February, far above market forecasts of contraction ranging from minus 0.4% to minus 5.1%, signaling a rebound in investment momentum. Infrastructure investment surged 11.4%, becoming the main pillar supporting overall investment. Industrial investment grew 5.4% with faster gains in mining and public utilities. Real estate development investment fell 11.1% year-on-year, narrowing the full-year 2025 decline by 6.1 percentage points, but remaining the biggest drag. New commercial housing sales area in the first 2 months reached 92.93 million square meters, down 13.5% year-on-year, with the decline widening 4.8 percentage points from the full year 2025 figure. Residential sales area dropped 15.9%, sales value fell 20.2% to 818.6 billion yuan, widening the decline by 7.6 percentage points, while residential sales value declined 21.8%. At the end of February, the floor area of unsold commercial housing stood at 799.98 million square meters, up 0.1% year-on-year, slowing 1.5 percentage points from the end of 2025. Of this, the area unsold for less than 3 years totaled 606.16 million square meters, down 1.6%. In the first 2 months of the year, China's urban surveyed unemployment rate averaged 5.3%, unchanged from the same period last year. In February alone, the rate stood at 5.3%, up 0.1 percentage point month-on-month against a market expectation of 5.1%. The National Bureau of Statistics said that overall the main economic indicators for the first 2 months show a clear rebound, and the national economy got off to a good start. However, changes in the external environment are deepening. Geopolitical risks remain elevated, and both old problems and new challenges in domestic economic development and transformation persist. Some enterprises continue to face difficulties. In the next stage, more proactive and effective macro policies will be implemented. New quality productive forces will be developed according to local conditions, and efforts will focus on stabilizing employment, enterprises, markets, and expectations to drive effective qualitative improvement and reasonable quantitative growth in the economy. On the Hong Kong Stock Board, Huahong Semiconductor surged 7.4% after reports that Huahong Group has developed 7nm advanced chip manufacturing technology suitable for AI chips. Its wafer foundry subsidiary Shanghai Huahong is preparing to mass-produce 7nm chips at its Shanghai plant, making it only the second Chinese chip maker after SMIC to possess this advanced technology, and marking a major milestone in China's push for technological self-reliance. Sources said Huahong plans to produce several thousand 7nm chips per month by the end of this year, and to expand capacity further. Byron Technology is currently using Huahong's 7nm line for tape-out, the process of turning chip designs into physical prototypes for testing before full-scale production. Byron's share price rose 5.6%. AI stock Zhipu launches GLM-5 turbo-based model for the open-claw lobster scenario, and raised new model API prices by 20%, sending its share price up 14.2% to close at $605. BYD jumped 7.8% to close at $104.3 after its Fangchengbao Leopard Titanium 3 flash charge version was launched last Friday, the 13th. Two configurations were introduced: a 620 km rear-wheel drive flash charge model and a 565 km all-wheel drive flash charge model, priced between 153,800 and 169,800 yuan. At the same time, the Titanium 7 EV flash charge version opened for pre-sale starting at 220,000 yuan. Compared with the 225 Titanium 3, the new flash charge version is 20,000 yuan more expensive, pushing the entry price into the 150,000 yuan bracket. The flash charge technology has raised costs somewhat, so pricing was adjusted to balance new technology investment and per vehicle profit. This year, the main competitive price range in the new energy vehicle market has clearly shifted from 100,000 to 150,000 yuan to 150,000 to 200,000 yuan. In addition, foreign media reported that BYD's Brazil plant has secured export orders for a total of 100,000 vehicles from Argentina and Mexico. Huahong China warned that last year's net profit could fall by as much as 40%, sending its shares down 11.2%. Auto dealer Zhongsheng plunged 15.2% after forecasting a full-year loss of up to 2 billion yuan. Leapmotor released its 2025 full-year results. Cumulative deliveries reached 596,555 units, up 103.1% from the same period in 2024, marking 2 consecutive years of doubling sales. Revenue rose 101.3% to 64.73 billion yuan. The full-year gross margin improved markedly to 14.5% from 8.4% in 2024, with the fourth quarter margin hitting a record single quarter high of 15%. The company swung from a 2.82 billion loss to a 540 million yuan profit, becoming only the second Chinese new energy vehicle maker after Li Auto to achieve annual profitability. Earnings per share were 0.39 yuan. No dividend was declared. The 540 million yuan profit fell short of analysts' forecast of more than 700 million yuan, possibly reflecting heavier promotional pressure or higher than expected R&D spending on intelligent driving technology. Leapmotor management set an ambitious 2026 target of 1 million units sold and 5 billion yuan in profit. The market is closely watching further details of its cooperation with Stellantis, especially whether other Chinese competitors will be brought in, which could affect Leapmotor's exclusive overseas advantage. Q Technology announced full-year results to December 31st last year, although reported net profit soared. The actual operating performance needs to account for non-recurrent gains. Turnover rose 29.3% to 20.877 billion yuan. Net profit jumped 435.2% to 1.494 billion yuan, or 125.7 cents per share. A final dividend of 0.4 Hong Kong dollar per share was declared, up from 0.1 Hong Kong dollars the previous year. The profit growth came mainly from higher operating revenue, a 1.7 percentage point improvement in gross margin, and an after-tax gain of about 810 million yuan from the disposal of a stake in the Indian subsidiary. Excluding that one-off gain, underlying net profit from continuing operations was approximately 684 million yuan. Technically, the Hang Seng Index formed a break below 10 peers above pattern and reclaimed the 10-day moving average at 25,637 points. It still needs to confirm it can hold above that level before attempting the 20-day moving average at 26,130 points. US President Trump called on countries to help address the Strait of Hormuz crisis, but Germany and the United Kingdom reportedly refused and threatened further strikes against Iran. Trump also said that because the war with Iran is ongoing, the United States has requested a roughly 1 month's postponement of his meeting with President Xi Jinping in Beijing. US stocks rebounded on Monday. The 3 major indexes rose more than 1% early in the session before gains narrowed. The Nasdaq closed up 268 points, or 1.2%, at 22,374. The Dow gained 387 points, or 0.8%, to 46,946, and the S&P 500 rose 67 points, or 1%, to 6,699. The fixed fear gauge fell 3.68 points, or 13.5%, to 23.51. The Nasdaq China Golden Dragon Index, which tracks Chinese stocks, rose nearly 1% or 67 points to close at 7,215. Meta is planning large-scale layoffs that could affect at least 20% of its workforce. Its shares rose 2.3%. Nvidia held its annual developer conference on Monday and its share price gained 1.7%. CEO Jensen Huang said that orders for its Blackwell and Vera Rubin AI chips are expected to reach $1 trillion by 2027. Nvidia plans to launch the Vera Rubin processor later this year. The company claims the system comprises 1.3 million components and will deliver 10 times the performance per watt of its predecessor. Grace Blackwell Nvidia also unveiled the Grok 3 Language Processing Unit (LPU), its first chip from the newly acquired startup. The company spent $20 billion last December to acquire most of Grok's assets, and the new product is scheduled to ship in the third quarter. In addition, Nvidia announced an expansion of its autonomous driving cooperation to include Hyundai, Nixon, Isuzu, as well as Chinese automakers BYD and Geely Automobile. The collaboration centers on Nvidia's Drive Hyperion platform, which helps companies develop and deploy L4 level autonomous driving assistance and self-driving functions that allow vehicles to operate without human intervention in designated areas or environments. Micron Technology plans to build a second manufacturing plant in Taiwan. Its shares rose about 4%. Market rumors suggested the U.S. Treasury or other government departments might act to suppress oil prices. Treasury Secretary Besant clarified that neither the Treasury nor any other government department will intervene to lower oil prices, and confirmed that the United States is allowing Iranian oil tankers to pass through the Strait of Hormuz to ensure global energy supply. Chevron remains steady. Our stock pick today is RemeGen, stock code 9995. RemeGen earlier issued a positive profit alert, expecting to achieve operating revenue of 3.251 billion yuan for the year ended December 31st, 2025, representing a year-on-year increase of 89.36%. The net profit attributable to owners of the parent company is expected to reach 708 million yuan, compared with a shareholders' loss of 146 million yuan recorded in 2024. The group's operating revenue rose 89.36% year-on-year, primarily driven by the rapid growth in domestic sales of its core products, telitacicept and disitamab vedotin, which have become the main engines of performance growth. At the same time, the group successfully secured a major partnership granting for Biopharma Inc. exclusive development and commercialization rights for telitacicept worldwide, excluding Greater China, resulting in a substantial increase in technology licensing income. In addition, through measures such as management optimization and production process iteration, the group reduced unit production costs and improved product gross margins. Sales expense ratio also declined significantly. Taking all these positive factors together, the group's profitability efficiency has improved markedly, and it is expected to swing from loss to profit in 2025. RemeGen is a fully integrated biopharmaceutical company dedicated to discovering, developing, and commercializing innovative and differentiated biologics for the treatment of unmet medical needs in autoimmune diseases, oncology, and ophthalmology in China and globally. The group has established a comprehensive end-to-end drug development platform covering all critical biologics development functions, including discovery, preclinical pharmacology, process and quality development, clinical development, and GMP-compliant manufacturing. It currently has a robust pipeline of more than 10 candidate drugs, 7 of which are in clinical development, targeting over 20 indications. 2 products that have already entered commercialization, telitacicept, trade name Tai-I, and disitamab vedotin, trade name IDC, are undergoing clinical trials for more than 20 indications in both China and the United States. Looking ahead, the group will continue to focus on the commercialization of telitacicept and disitamab vedotin in China, actively expanding market penetration. It will also accelerate the filing and clinical trial progress for new indications of its pipeline assets. Internationally, the group will further intensify efforts to rapidly advance and initiate clinical studies of its core products in overseas markets. It will collaborate with 4 biopharma Inc., Pfizer, Seagen, and Centon China to support clinical trials and regulatory filings for telitacicept, disitamab vedotin, and RC28E, and in the licensed territories. Recommendations: suggested entry price $87, target price $97, stop loss $83. I do not hold the stock mentioned above.